Be strong.
And we are back with Wealthy Choices with Steve and Tyler, and we're continuing our talk about the Regional Opportunities Investment Tax Credit. Today we're going to talk about who qualifies for that credit. Is that right, Steve?
Yeah, well, so to recap a little bit, first of all, this tax credit can get you up to $270,000 in money from the government.
This is huge.
Huge.
So diving into it, Steve, who does qualify for this?
All right, so who is eligible? First of all, you have to have a Canadian-controlled private corporation. So this is not for publicly traded companies.
This is corporations.
And exactly. Right. It's not for individuals that just have sole proprietorship or partnership businesses. You have to have a corporation. Now, that doesn't mean that you have to have a corporation existing. Because of the timeline of this particular tax credit that goes from March 24th, 2021, and qualifying investments made and available for use by December 31st, 2022, means that you could start a corporation today and still qualify for the full amount of this tax credit for an annual basis. Now, $270,000 would be over multiple years, so you can't get all of that if you started today, right? Yep. But you can definitely get a large portion of that, $90,000 or maybe even $180,000, depending on the timing of your investments, and again, where your corporate structure is, when your year end is. There's a lot of factors that go into this, but the point I'm trying to make is that you could not have a corporation today, start one tomorrow, and qualify for a minimum of $90,000 with the correct type of investments. So that's the first thing.
Steve, this may be a silly question, but I see qualifying investments. What is a qualifying investment? Is that something?
That's our next video.
Oh, well, we're not going to talk about it today.
But people want to know that.
Yes.
There's a couple other things that people need to know about who is eligible. You have to have a permanent establishment in Ontario.
Like a brick and mortar business? Is that what you mean by
that?
Well,
you need to have a corporation, and you can't just it says have a permanent establishment in Ontario at the time the qualifying investment is made. So I think that if you just opened up, if let's say that you lived in another province or out of the country and had a P.O. box in Ontario, that's not going to qualify.
Okay.
You have to have a permanent establishment in Ontario, which it doesn't say that it can't be your residence. Lots of corporations are run out of people's residence. It's a permanent establishment in Ontario.
Yeah, that makes sense. Yep.
And you have to have made, the third thing on the who is eligible is you have to have made a qualifying investment in a designated region in the province.
So, like, purchased a property? Would that be an invest or a building?
A property or a building, as long as it is commercial,
right? Yep.
Or industrial, a purchase or a renovation of that property. So you can own a property existing now, and you could be improving it, or you could be adding to your property portfolio or your business assets, and the purchase qualifies as well.
Wow. Okay. Cool.
Yeah. But although we're getting into what qualifies, which is a little bit out of the who qualifies.
Hey everyone, Tyler here. That is our first 2 mini-series episodes of the Regional Opportunities Investment Tax Credit. A bit of a mouthful. Next week we will be releasing the last 2 parts of this series. So stay tuned Thursday and Friday. Check back in for those last 2 episodes. Thanks, guys.